Då ska vi se. Hjärtligt välkomna tillbaka allesammans. Kul att se så många här i rummet. Mitt namn är Sten Gustafsson. Jag är healthcare-analytiker här på ABG och även ansvarar för analysavdelningen här i Stockholm. Vi kommer strax börja prata engelska, men presentationen kommer hållas på engelska och vi kommer prata i 20 minuter någonting, 15-20 minuter och sen kommer jag ställa lite frågor. It's a great pleasure to introduce our next speaker, Morten Henneveld, CEO of OssDsign. I was just telling the audience that we'll do the presentation in English.
Good.
The floor is yours.
Good. Well, thank you very much. I do understand fluent Swedish. It's just you guys don't understand me so well. So anyway, thank you very much for having us again. And I see a lot of familiar faces in the room. We'll go straight into it. We have the normal disclaimer. The company is still going strong. We reported Q3 numbers here recently. 54% organic growth. We maintain a very high gross margin year to date above 96%. During the year, we've also passed the 10,000 case mark, which means that we've treated more than 10,000 patients, and we'll come back to it. But we published some very extraordinary clinical data here towards the end of Q2. And as you can see, very nice pattern in just about 3.5 years or so, 4 years. We have built a very, very meaningful orthobiologics business. 12-month momentum right now is up 48%. Of course, we start to compare against tougher and tougher quarters, but a very strong underlying trajectory we're seeing in the company. I'll go a little bit quickly. I think many of you have seen it here. We still operate in a very large market. It's growing very nicely. There are quite a lot of competitors, but it's a very big market and there's plenty of room for everyone. You know, the key thing why we are here is because a lot of patients are in need of spinal surgery, and unfortunately a lot of those patients will need what's called a fusion surgery, and here we're seeing about 20 to 30% of those clinical cases not achieving the outcome. So you're talking hundreds of thousands of patients every year that have to go through revision surgery. So there is a very significant need, and I think many of you have also seen this before, but essentially when you are doing a fusion surgery using hardware, but you're also using a bone graft. And what you really need is something called what we call a bridging bone, where you have a fully fledged bone throughout. And at the end, you have what we call vascular environment. So you have blood stimulating bone growth. The real clinical challenge is what we call in the endochondral space, where we have an avascular environment. So this is entirely up to the potency of the bone graft itself to challenge that. And that is very special to spine because you're trying to build bone where bone doesn't exist. When you look at the traditional synthetic, they grow bone in what we call a creeping fashion. So they will start in the vascular environment and then will creep towards the middle. Now the issue is, of course, if it never reaches each other in the middle, you won't have a bridging bone and you have a failed outcome. Or potentially it can take so long that during this process, you will start to see adverse incidents like implant loosenings, infections, and other things that can occur in the voids. All the way back, and one of the reasons we originally acquired Sirakoss was because we saw this product work and this technology work in a very different way. Essentially, it has what we call a dual bone formation pathway. It grows bone as much in the middle section and at the same time as it does from the outside. So in very simple terms, it grows both bone outside in and inside out at the exact same speed. Ultimately, that is, of course, why we also believe we are seeing these very high fusion rates. And so what's really unique about this is that for a long, long time, I've been in this business, starting in 12 for the first time it has been the holy grail to find a synthetic solution that comes without the risk of what we call allograft, the donor base that comes with a risk of disease transmission, but also come up with a synthetic solution that really mimics that of native bone. And that's what we have with OssDsign Catalyst. We're operating at such a low nanoscale that it actually mimics the mineral crystals inside the bone. And then we've added something called a silicate substitute. You can think of this as a booster, but it essentially means that it powers the product and the potency, but in a very controlled fashion. Not like the BMP2 drugs that are extremely potent, but they're also a little bit uncontrollable. This is very controlled, like a supercharged car. And this has translated into very, very strong clinical data from the very beginning of our first preclinical study called the Bowden study, which was used to actually clear the product in the US, where we saw 100% fusion at 26 weeks. Then we did our first in-patient study where we saw 93%. In this business, the gold standard is to look at fusion rate at 12 months. We saw 93% in that group, but we also saw that increasing to 100% at 2 years. Then in June, we published our largest cohort study to date. It's 108 patients. And what's really important here is that this is real-world data. When you're doing a randomized controlled trial, which has a lot of value, but it is also a quote-unquote perfect patient. There are so many exclusion criteria. And that is why you see real-world data gaining traction, not least among FDA, but also among surgeons, because surgeons are really struggling replicating the randomized control outcomes in their practice, because patients are a lot more complex. They are obese, they are smokers, they have diabetic, they've had previous spine surgery. There can be a lot of what we call known surgical and patient risk factors. In this group, they were all in there, and still we reached 88.4%, so significantly above the average in the industry. And one of the important things is also, as you can see, it's very small, it's a little bit of a busy slide, but what you can also see is that this is very consistent. It doesn't really matter what surgical risk factor the patient brought in, if they were obese, elderly, osteoporotic, diabetic, had previous spine surgery. We're seeing a very high fusion rate, somewhere between 84 and 93% throughout that cohort. And then we took, as I said in the beginning, the real clinical challenge is in what we call an avascular space. So we took that to an extreme and did a preclinical study, which also published during Q2, and basically put it inside a muscle pouch. A muscle pouch is completely sealed off. You get absolutely no help to grow bone, and there is no blood available, and yet we grew a lot of bone, as you can see, significantly outperforming the predicate device again. So I think you can always discuss when you have enough clinical evidence. I don't think you ever will, but we are actually at a point now where we now have 17 different publications. We have 9 clinical peer-reviewed publications. We have 4 clinical white papers, and we also have 4 preclinical publications and white papers. And bear in mind, we've only been at this for 4 years. So this is an exceptional progress, not least in the last 18 months or so, since when we did the strategic shift to become a pure player of a biologics company and we entered January 24, we did not have a single piece of clinical evidence. So as you can see, we are really accelerating the speed with which we are creating clinical data. And luckily for us, the data that comes out is exceptionally strong. So as I said, you can always discuss when you can start to draw conclusions on clinical data. But what we can see right now is that we are seeing a consistent high fusion rate across preclinical, randomized controlled trial, which was our first in-patient soft fusion study, and now also in real-world patients from PROPEL. We're also seeing the same strong clinical outcomes on what we call simple patients and complex patients. And of course, the logic is that if you can solve the complex patients, then of course you can also solve the simple patients. As I mentioned, we're also seeing this consistent high fusion rate across all the known surgical and patient risk factors. And then, last but not least, the ovine study that we did, the authors concluded that we are the very first bone graft in the market to see such a robust functional bone at such an early time point in such a challenging environment. So I think we will keep going at it. As you know, building clinical data has been a top priority from the very beginning when we started the journey into orthobiologics, and that is certainly something that we will continue to do so. But we are exceptionally pleased, and this data resonates incredibly well, of course, with hospitals and surgeons. Still, we have 90% of the market that we haven't even touched. We're actually ahead of our own targets and have been throughout since the very beginning in terms of hospital access, but it is a very large market. We are now at a 10% access, but it does mean that we have 90% of the spine market that we can still penetrate, which is a huge growth opportunity in the years to come. And then, of course, we also have opportunities outside spine. Our existing 510(k) clearance in the US allows us to be used, and we are used right now outside spine. We are used in what we call pelvis cases, in particular what's called sacroiliac fusions. It's done by spine surgeons, but we have also been used from the very beginning in some foot and ankle cases. And that is something, as we'll talk about the strategy and what we plan to going forward, where we also see that segment is something that we will start to pay more attention to in the coming years. So as a result of that, also appreciating that we actually haven't made any large investments, in particular not in the sales force, since 22. We launched a new growth strategy earlier in the year. It's called Scale to Profit. And it essentially means that we're going to scale the company, grow the company, but also that we will reach cash flow positive and become profitable within this strategy period. But essentially, the strategy has four very simple, very clear priorities. One is we need to keep building access and coverage in the US market. The primary driver there is that we're going to double the sales force. We are well on the way on the recruitments for that. Of course, new sales reps take a little bit of time before they start to really generate meaningful sales. But that is well on the way already, and we expect by the beginning of Q2 already next year to have everyone recruited and on the ground. The second one is we still only have one product as we operate today. Next year, we're already going to launch the second product. It's going to be an MIS, minimum invasive product. And then towards the end of 27, beginning of 28, we will launch what's called a hydrophilic strip. And that's probably the biggest revenue generator. About 25% or so of all lower back cases are done by surgeons with a hydrophilic strip. You can use our putty product today if you want, but some surgeons just have a preference for doing that. So those are cases that we don't have access to today, which we will get towards the end of 27. Then we also want to build a complete repository of clinical evidence. As you've seen, we are becoming more and more bullish for every day that goes by related to the clinical outcomes that we are able to generate with this technology. And we want to be in that top league of only very few companies that can also demonstrate what we call level 1 data, which is the highest quality of clinical data. So we are going to embark on a larger randomized control level 1 study. It's underway. We think it's going to get off the ground in the second half of 26. Still discussions around the exact size, but it's probably going to be somewhere between 200 and 400 patients in that study. So quite a big study. It's going to take about 5 years. And last but not least, of course, we want to scale production. But as we are doing that, we're still producing in the traditional way and how we started we can actually produce in a more scalable way, and also a scalable way which is more cost efficient, which may sound a little bit strange given that we have 96% gross margin, but that is actually true. We have a very clear line of sight to reducing COGS even further, which will be accretive to gross margins going forward. So we're going to do this. We start to compare against tougher quarters as well, and that means that we need to keep building. But as you can see, we are putting in a lot of effort and also investments right now in the company to accelerate growth. So I think that was everything I had, Sten.
Excellent. Thank you very much. So going back to all the investments you're doing, as you said, you're going to double the sales force, you invest in new products, and so on, which is great. I still get questions regarding the sort of the. I know you have like 211 million in cash, but will it be enough to take you all the way to profitability?
I mean, that's, of course, a model and a strategy is already trying to predict the future 4 years out. But yes, from what we can see, and I think many of you know me, know our CFO, Anders, we are quite conservative relative to communicating targets. But yes, to answer your question in short, we do see this plan as being fully funded, yes.
That's good. I mean, we have seen sort of the cash burn go down, which is good. But at the same time, you will now double the sales force and all of that. So,
but of course, I mean, all that is factored in. But as you can also see, even in Q3, which is probably a little bit of a softer sales quarter, still 5% growth quarter over quarter, but relative to some earlier quarters at least, you can see even in that quarter, you're seeing very significant operating leverage. And that is what we're seeing in the business right now. We're seeing a very scalable model. So of course, as you start to also grow top line and you start to get return on these investments, not least the sales force doubling, then of course, your fixed cost base is going to remain the same, which all things equal means you're going to see even more operating leverage in the business.
Sounds good. So going back to the Q3 number you said, and correct me if I'm wrong, but I think the sort of the summer part of Q3 was for a lot of companies a bit slower than maybe what we've seen normally, and then it sort of took off during the quarter. Has that momentum continued into Q4?
Yeah, I mean, that's what we said. I think we are getting at the end of the quarter, so I don't think I want to talk too much about this quarter. But yeah, I mean, as we said when we reported Q3, absolutely, we saw September being the highest month ever in the company. So we're seeing a very, very good momentum. And of course, I understand people in the quarter, they look at the reported numbers. We actually already in Q2 disclosed that we had a big movement of orders of 1.5 million, right, which creates a 3 million delta. So sometimes you're not quite in control about when customers place the order. So, but that's also why even when we had an exceptional strong Q2, we actually went out to the market and said, this is the case. It's better. It's not as good as it looks on paper, at least, right? But people forgot that when we reported Q3, I think.
So you obviously you have all the sales in the US and will most likely continue in the near future to focus on the US. With the new administration, there's been a lot of things going on, and with the government shutdown and potential changes in the reimbursement and Medicare, Medicaid. What do you make out of that?
I mean, we don't see any change whatsoever. It's a short answer.
So there's a lot of noise.
We are approved under procedural code, which means the hospitals get a reimbursement for their procedure, and then they can decide to use whatever products in order to treat that patient. So we belong under that. I mean, as we've also said for the last 12 quarters at least, we are seeing a longer period to get approved in hospitals. It used to be back in the days, which I call the good old days, was 3 to 4 months. Now it is closer to 6 to 9. But I mean, we saw that quite early, Sten, and what we just did is we just start building a pipeline which is twice as big to compensate for the longer lead time, so you have the same flow. And as I said, we are even surprised that we've been able to get into so many hospitals so fast. We are ahead of our own targets, even the targets that we laid out when we acquired Sirakoss.
That's good. Have you noticed any change in the competitive landscape? One of the competitors teamed up with Medtronic in the beginning of the year. Has that changed anything?
It's difficult to say. We're technically competing against 100 companies. We don't often meet 100 companies when we're bidding for things. It tends to be more a handful, but no, we haven't seen any change to the competitive landscape. We're seeing innovation being fairly low in this business. We are seeing a lot of private equity starting to buy into the business. And I think that's going to create an interesting dynamics, because that means there's probably going to be more transactions happening in the industry in the years to come. So, but for now, I think it's very much more of the same. And I think we are every day, we are kind of manifesting our position in the market as an absolute serious player now, even though we are the new kid on the block.
And I mean, your product would be a nice sort of add-on product for a lot of those big players also in the end.
Yeah, I mean, you have to ask them that question, right? That's not my
I can see the
concern. Is
logic.
that we're going to build a rock solid company that's growing fast, and hopefully with these investments will grow even faster into 26.
Yeah.
So that's our main focus, right? Then whatever other people think and want to do, that's their decision.
Sure. Going back to the reimbursements from CMS, has the procedural reimbursements for spine has traditionally been very high. Is that still on the rise? Did they adjust them?
We haven't heard of any changes.
No.
I mean, I think right now, which tends to be the case in the US, you go after the big budgets, which is around typically the drugs, and right now it's obesity and weight loss.
Yep.
We've not seen or heard any rumors that it's going to drill down to spine. And we'll have to see, right? We monitor this, but for now, I think we are good, and we don't expect any changes as such.
Excellent. And you talked about becoming profitable during your strategic timeline, which ends in 28. Second half, is that so around 27, 28?
Yeah, I mean, what we said when we announced the strategy is that we're going to make these investments. They are going to be incredibly meaningful. They will accelerate growth, of course, but they will also position us as an elite player in the biologics field, not least with the level 1. And then we updated our financial target to be above 400 million in sales by 28, and also become profitable, cash flow positive during the second half of that period.
Yeah.
So that's still statements that we confirm.
Yep. Very good. And you mentioned the clinical trial starts maybe already next year, the randomized clinical trial.
Yeah, I mean, of course, it's a big undertaking, also a bit undertaking for a small company, and we don't know exactly how many sites, but it's probably going to be between 10 and 20. So those are, of course, sites that need to agree on the protocol. So we have some very, very interesting discussions right now. Of course, when you decide to do a level 1, that creates noise in the market, right? That attracts attention in the market. And of course, it means that we are now discussing with centers that we normally probably wouldn't have FaceTime in front of, because they start to take you very seriously as a manufacturer when you invest in level 1, in particular because very, very few companies actually have level 1 data today.
How many are there?
We are down to a few. Of course, you have the Medtronics that have been around for 20 years. You have one of our competitors, Therapeutics, that have level 1. And then you have, kind of 1 or 2 other products, but that's about it.
Yeah.
So it's very, very few. And, we want to get in that circle. I don't know how many people will have it, but I don't think it's going to be more than 6, 5, 6 maybe, when we get there. And so it will position us. And I think just the sheer fact, Sten, that we're doing it, right? It shows confidence.
Absolutely.
And it also shows that we are a very serious player. There are many companies in the industry that come in for a very short time and then they disappear. We are in it for the long run, and I think we sent a very clear signal to the market and to surgeons by doing this.
Yep. Excellent. Thank you very much. We're running out of time. So
Good. Thank you very much.
Thank you very much for